The AI bubble seems to be getting worse every single day, and yet there's an even bigger pink elephant shaped balloon right behind it, and yet no one is talking about it. Despite all this, I'm going to continue to invest. Why is that? Aren't you worried? So let's say you invest in this Apple, right? You're investing in Apple, not Apple the company, but you're just investing in this Apple. The stock of this Apple goes up. So then you use those proceeds to buy Orange. Now when you buy Orange and everyone else is buying Orange, then the stock of Orange goes up. So then you invest in Apple again. And then this goes up again, which means now you have more margin, more power, more buying power to invest in Orange again. That's what people are talking about. That's what kind of people are comparing this Nvidia, AMD, OpenAI, and all these other AI stock kind of speculation bubble thing, right? That's what everyone's saying. That's why everyone is saying AI is a bubble. Now, with this, going back to this Apple and Orange example, what if instead of being AI companies, AMD, Nvidia, OpenAI, whatever, what if instead this was crypto and this was a stock market? That's a bubble, right? What if instead of what if we go a little bit more granular, right? What if instead of one apple and one orange, we had 7 apples, and then that's the Magnificent Seven bubble. It's the same thing, right? Like, it's not just AI. It's not just the stock. It's not just the stock market. There's so many things in which it's more of a leverage bubble than a specific like sector of the economy or a specific type of technology bubble, in my opinion. And I think that is the main black swan that we have to look out for. But then if it's a black swan, why are you still investing? So I have this thing where I'm going to call it the Trump trade, where you know how back then they said that you shouldn't don't bet against America? Well, I feel the same thing right now. It's don't bet against Trump. Don't bet against Trump. Just why are you betting against Trump? So he, like, love him or hate him, right? You're it's pretty obvious that like he's in it, if not only for him, like at least slightly for his own personal gain, right? I think Republican, Democrat, moderate, independent, you can kind of see that. So where are most of Trump's assets? Where is most of what is his money in the Vietnamese dong? And is his money in, I don't know, like real estate in Bangladesh? No, it's in America, right? It's in his money is in the dollar. So I don't like people talking about like, oh, the de-dollarization, or people worried and people flocking to gold, people flocking to all these things. People saying, oh, we should invest in different economies. Trump, you have to think in his mind, right? Think about what he wants and then trade accordingly. Don't go against the current in the same way you don't want to fight the tape at all-time highs. You don't short at all-time highs, and you don't go against the administration when you can clearly see that they probably have personal motives, right? So just don't bet against it. That's my own opinion. I don't think it's a good idea. I mean, you can do whatever you want, but my opinion is you don't want it. You don't just don't fight the tape, and don't bet against the people that are basically laying out the rules, that are playing with extra information that you don't have. Don't bet against it. So that's kind of where my mind is at right now, in that the thing that we have to worry about the most is what happens if Trump actually loses control of this, right? I think that until now, Trump has had a pretty firm control, a pretty firm grasp on the market, on not just Trump, right? Just the administration in general. They've had a pretty firm grasp on, I don't want to call it manipulation, but like on kind of playing the market and being able to win and like take profits before anything happens, right? I think we can probably, I mean, when he truthed, it's a good time to buy in the stock market, or like the sudden like random shorting a week ago before Bitcoin dropped like I think like 10% or something like that. I think the most important thing right now that I want to caution everyone about is, even though I'm going to continue to invest, it's really, do be careful of margin, do be careful of over leveraging yourself, because there will be those pullbacks, right? It's in my opinion, it's probably just a way for people to take profits and then just kind of screw over everyone that's over leveraged. But like as long as you're not like in massive amounts of margin, or you're not in like leverage to 100%, and you're able to to withstand those 10% pullbacks, 20% pullbacks, 30% pullbacks, then it doesn't matter, right? You're not going to be margin called. The thing that's the most worrisome is if you are over leveraged, if you are at max margin, and then all of a sudden the stock drops, Nvidia pulls back, I don't know, like like 10%, 15%, your max like Palantir pulls back 10, 15%, you can't account for that. And like there's more and more potential, I wouldn't call it black swans because they're so common now, but there's more and more potential market movers, and so many like I guess they are black swans, right? Because we don't know about it. So there's, I guess we could call it a gray swan because we don't know about it, but then other people that are like they're like people part of the administration, they know about it. But there's so many of those events that are going to happen that will become market movers, that you do have to be careful of being too leveraged, right? You hear about those horror stories of people losing millions of dollars in the stock market over a single day because you don't expect Bitcoin to pull back 10%, 20%. And do I believe that cryptocurrency is going to crash? Or do I believe that that AI stocks are going to crash, or the Magnificent Seven is going to crash because of valuation, or because of whatever, because the stock market might crash? I don't think it will crash. I think that even if it does pull back a lot, everything is so intertwined that it comes to a point where there's no single part of the economy that's too big to fail. In fact, it's the entire economy itself that is too big to fail. And there will be what is it called? There will be not stop losses. What's the thing? Like triggers, the stop triggers. I don't know what it's called, but like there will be floors where the economy, the Fed, the administration, they won't let it go. They won't let it drop beyond a certain point, because at that point, if it does drop beyond that point, then it's too big to fail. If it does fail, we're basically screwed because of how much leverage there is. So I do just want to caution that maybe it won't happen, right? Maybe I'm just being overly paranoid, but make sure to I think that now is a good time to, if you do have any debts, if you are in margin, try to start whittling down that margin, because you never know when another 10% pullback is going to happen. You never know when another 20% pullback is going to happen, right? But if you don't have any margin debt, you're not in any debt, and you don't need the money immediately, well, it doesn't matter, right? Because time in the market beats timing the market. So those are my opinion. Kind of weird how Buffett's also, he's basically timing the market right now. So I don't know what's happening. But yeah, that's just my thoughts on everyone talking about this AI bubble. Everyone talking about this bubble. It's not just an AI bubble. It's everything bubble. I don't see how anyone's not noticing, but the amount of there's no breath in the stock market. Most of the gains of the stock market have been in those 7 companies, probably a few more, maybe 10, 15, 20 companies, right? Most of the gains are, most of the wealth, most of the gains are concentrated in that small percentage of the stock market, when everything else is kind of doing mediocre at most, right? So I don't think that it's either the Fed or the administration or whatever, they're not going to allow stocks to drop beyond a certain point. But if you can hold past it dropping before that point, then you'll win, right? Then it'll just go back up. But if you can't, in my opinion, right? No guarantees. But if you can't make it before it, if you can't hold the drop, if you can't stomach the drop, or if your account can't withstand the drop to that certain point, and you get sold out, you get margin called, well, then you're screwed, right? You just lost a bunch of profit, and sometimes you lost a lot because it's on margin, and then you miss out on the gain, you miss out on the recovery. So I think that the bubble is too big to fail now, to a certain point where it makes it more scary in the future. But as of right now, when it's more calm, when I say calm, it's really calm right now, but it's not actually that calm. But right now, when it is manageable, it's when you should still be staying in the market, right? I don't suggest too many stop losses or anything, because stop losses are often like they're hunted for, right? There's stop loss hunting that people talk about. There's so maybe I would advocate, in my opinion, maybe having a lower stop loss, or if you don't have that, just invest in companies that you know have a floor, right? Like that have a lot of like assets where even if it was liquidized, you'd still get like some money back, right? You still get a majority of your money back, right? Now is not I mean, I don't think that now is a good time for speculative plays. Maybe you can do like a barbell play that Nassim Taleb recommends, where you have most of your money in for sure assets or like value plays, and then you have like 10% or like 5% or 15% in more speculative plays, right? That's something that Nassim Taleb, the author of Black Swan, he recommends. It's kind of just an insurance play with some stable income. That's basically what it is. So I don't know. This is just long-winded me talking about the AI bubble and how it's not just the AI bubble, right? It's the everything bubble. And honestly, if you don't invest in it, right, inflation is gonna bite you in the ass, and you're gonna get screwed over. So you're kind of forced to throw your money into the market. Just what I'm saying is, you should invest in the market. You should invest in assets. Just don't over leverage yourself. Don't put yourself in margin, and just be careful. That's it. Bye.